the correlation between, I ran this data back to, I think it was 2013. If you've held for any 4-year period within that time frame,
you're good.
96.06%, right? Like chance of a positive return any date you pick. So it's just like, I mean, it's not a
good, but 4 years is a long time for a lot of people. I mean, people can't think 4 minutes, 4 hours, 4 days, 4 months. I mean, it's, you get on Twitter, you look at, a lot of investors, they want instant gratification, all the crypto bros, they all want instant gratification. That's just, and that's, by the way, that's all a function of fiat. I mean, fiat, when you've got money that's debasing, when you've got a system that's fallen apart, this is why people play the lottery, because it feels like their life is hopeless, and they want to have some hope. Well, okay, I'll buy this ticket. Who knows? Maybe it'll hit. They'll give me a little bit. I mean, it's a stupid thing to do economically. It makes no sense, but they do it. And I think that, it leads to the gambling culture in the stock market. It leads to the gambling culture with cryptocurrencies. I mean, there's a lot of evil or ill, bad behavior that occurs in a fiat-based system, and gets incentivized in a fiat-based system.
Yeah, I like, I mean, for sure. I mean, the Tim Ferriss 4-hour work week, it's so funny how telling that is, and how he became the most popular podcaster in the world. Yeah. And that just was like a trend, like a shift to, I can work 4 hours and live my best life, like, it's like, no, that's not really, it's been true for Tim. The leading edge of this technological revolution, right? It's like everybody chases their friend who invested in NVIDIA. Yeah. They look at their car and then don't realize that, right? They're up 30,000%. And so then they chase, not realizing the volatility you have on the whipsaw.
That's exactly right. I mean, there's a lot to be learned from being in early in a major trend.
Well, that's one of the things I want to get to is just people say that they're late. Like they're like, oh, Bitcoin's already, it's the number, right? We don't have stocks. Yeah. We're 64K. Like how
yeah. No, I encounter that all the time. I mean, they're like, well, yeah, but your basis is so much lower. I'm not going to put money in your pocket, blah, 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 blah. And I counter with kind of it's going up forever lower argument, which is, if you really consider, I mean, I usually come at that concern with a macro view. And I say, look, and this is, Jesse Croesus BTC on Twitter has done the best job of this, because you got that beautiful chart or diagram, or schematic, I should say, where, there's $900 billion of fiat assets, right? I mean, real estate, stocks, bonds, cash, you name it. And there's $1 trillion or $900 trillion of fiat assets. There's $1 trillion of market value in Bitcoin. There's about 12 trillion, maybe a little more now that gold's up in gold, but really only about half of that's for sale, because a lot of it is in jewelry and museums and so forth. And so call it 6 trillion. I mean, that 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have 3 choices, Bitcoin, gold, and silver.
Yeah.
And so all of which represent money. And so, that is going to, in my opinion, drive the price of all 3 of those assets to levels that people today can't even imagine. And I get it, because, they look backwards, and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars, and particularly the Civil War. But, people they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that, when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. Well, fine, but unless we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use, and everyone has a choice. Everyone wakes up every morning, they can decide, where am I going to put my savings? And we're going to leave them in the bank. We're going to buy a bond. We're going to buy a stock, whatever, or we're going to buy gold, silver, or Bitcoin. And look, some Americans are figuring it out. I get a kick out of the fact that Costco every quarterly report I try and listen to their earnings report, and they talk about how many gold bars they're selling.
Oh, yeah.
So, I mean, people would say these average American Costco shoppers. I know I shop there. I love the place. They're buying gold, right? Why? Well, because they kind of know that it can't be debased, right?
Yeah.
And so, that trend. I think that trend is going to continue. So, in my view, Bitcoin has no top, and gold and silver have no top because fiat really has no bottom. I mean, if it sounds extreme, but I think it's possible. I'm not saying it's a likely case. I think it's a tail case. It used to be an extreme tail case. It's becoming less extreme, but there's a tail case that says that fiat currencies all fail, and under what time frame, unclear. Certainly it could be many, many years. I tend to think it might be faster than that, but I don't want to try and panic people. But my point is that you don't even need fiat to fail for Bitcoin and gold to be very, very good investments on a comparative basis. I mean, since 2000, gold has outperformed the S&P 500 by quite a bit, and everyone points to the S&P as being your best inflation hedge. It hasn't outperformed the Nasdaq. I mean, the technology stocks have done much better than gold, but there you've got risk. I mean, unless you're dealing with the monopolies. I mean, it's the digital monopolies really are kind of something to behold in terms of the quality of their cash flow stream and the defensibility of their positions. I mean, perhaps someday there'll be something other than Google, but right now, it seems to be they've got one of the most defensive moats I've ever seen in any business. Right?
It's crazy.
Yeah.
Toll Road. Like,
yeah.
I always want to give people this story. I went to William and Mary, which is the second oldest university to Harvard, 1693. Yeah. But when you look at the relative amount, where it's a public Ivy, they call it, but our endowment is only $2 billion, right? Relative to the Princetons, the Harvards, the Yales, the Columbia, the Cal Berkeleys. And it's because they invested 100% of their treasury, thank you, TJ, Thomas Jefferson, into Confederate war bonds.
Oh, really?
That went to zero, right?
Oh, wow.
And so the treasury started at zero, where everyone else had the chance to compound. And so I always I think people, they hear these two things, right? They hear the extremes of the clickbait, the doom porn of, the things we're about to crash. And I think you have to see two kind of things, right? I think we are at the end of a cycle, like a major world cycle in terms of money and monetary debasement. But we're kind of at the last stage of this kind of an upward cycle, right? Like they're printing money to oblivion right now, like the M2 in China and everywhere else. Every central bank across the world is cutting.
Right.
Everyone is in trouble. So there's a mini cycle that, you should probably be invested in and take advantage of. But don't forget that we're driving faster towards the edge of a cliff. Like, give me your perspective on that longer term, where we are, the $35 trillion elephant in the room.
Yeah. Well, it's amazing. It's amazing to me that nobody in Washington is talking about it. I think they're just pretending it'll go away, or they won't react until they have to react as a result of a crisis. I mean, in my mind and in my investment, views, I model it in my head, kind of using this fourth turning model, which we're in one, right? And the issue is money. And I think you know what I'm talking about. Maybe for listeners don't. There's a book called The Fourth Turning by Howe and Strauss. It talks about how every 80 years you have a cycle of a crisis cycle where the rules change. The last one before this was World War II and the Depression. Before that was the Civil War in 65. Before that was the Revolutionary War in 76, started in 76. And so every 80 years, kind of society gets thrown on its ear and a new set of rules come out of the other side. And I think we're at the end of the 80-year cycle, that started post-World War II when we had fabulous growth and the United States was on top of the world. And I marked the beginning of this fourth turning as 2008 because that financial crisis really kind of kicked it off, right? I mean, it was huge. It was worldwide. It was significant. And the financial system nearly failed. And these cycles, they vary in length, and the model's not perfect, but it if you look at them, it tends to suggest they last kind of 20 to 25 years. Some are shorter. The Civil War was shorter, although you could argue it started earlier than when the guns started firing. But the point is that if that's the case, that would imply that we will resolve this cycle sometime late this decade, early in the 2030s, and that kind of feels right to me. I think that they're going to continue to print money. I think that inflation is going to come back. And I think that as time goes by, more and more people are going to become aware of this as an issue. I mean, we're seeing, people like Elon is aware of it. RFK Jr. is aware of it. He tried to make Trump aware of it. I think he kind of is. I don't know that he knows what to do about it. But the point is that I think that, it's going to become clear that the money is broken, as the title of Lynn's book. And as that becomes more and more clear, I think that, we'll start to look for solutions. And it could be a monetary reset. That's what Roosevelt did in the 30s. It could be, a slow transition, a gradual transition, hopefully a painless transition to a more sound money system. I'm not sure if, it's going to take real skill and real political leadership to pull that off, but it's possible. I think the alternative to that is we're just going to keep driving the car as fast as we can until something blows up. And, they have the big print where, the Fed balance sheet, if you've noticed, is kind of, pre-08, it was at 900 billion. 08 kicked it off, and Bernanke grew it up almost to 4 trillion. Then they brought it back down a little bit, and then COVID hit, and they took it up to 9 trillion, brought it back down to 7. I mean, the next one, in my view, takes us to 25. And the good news is we might all end up being millionaires. The bad news is gasoline might be $20 a gallon, and a hamburger is going to cost $100. I mean, that's kind of the way we're going, and that's why I say it's really just all math. I mean, it's, in a debt-based system where you need debt for growth and you need to service that debt, and the underlying productivity and GDP is not growing at a rate that's fast enough to support the debt. The only way to fill the blank, or, to make the numbers square, is to print more money. And, which you can do, and we've done, and it's not uncommon. But by definition, you're not printing goods and services. So you print more money, you have the same goods and services, we're all competing for them. The cost of those goods and services is going up. And so that's the underlying problem. And really, there's nobody in Washington talking about how to address it or solve it, which is very unfortunate. But, like I say, I'm hopeful that, things like, my book, other books, knowledge, even the mainstream is starting to say, talk about this a little bit more. I mean, you're seeing it creep into a lot of different discussions. And I think, in 5 or 10 years, it's going to be common knowledge that this monetary system is broken.